Hello and welcome to another update video about VeChain. On the VET chart, we still see that the price is in this diagonal pattern. The price is respecting the boundaries of this ascending price channel that started to form here in June when the upside movement started to form here. The idea is that here possibly a fourth wave bottomed in January and we might be in the fifth wave to the upside. Condition for that would be that the last low is obviously holding. Okay, so the 2.5 cent level needs to hold. I haven't got a very clear structure from those lows. The overall structure is a bit messy. You see it actually here. Microstructure a bit unreliable, but we have a pretty much corrective looking decline, overlapping price action into the support area. This is quite supportive of my bullish thesis that we should see ideally one more high. It is a bullish market. I expect the same for most coins, one more high. If the micro support breaks, I mean, I'm talking about the last swing low. If the price breaks below 2.5 cents, it wouldn't be necessarily a disaster. It would most likely just lead to a retest of the lower support regions in the orange box. Bear in mind, the orange box is just the relevant support zone for the wave 4. I will take the upper one, or the 23.6 Fib now out because it just blocks our view and it broke below that anyway. But the idea is that in such a wave 4, in a diagonal, and this is definitely not an impulse, which makes it already challenging to trade. Yeah, I have to say that it's challenging to trade anything that's not an impulse. And if you're trading within a diagonal, then just be a bit more careful. Yeah, I can only recommend to watch for 1-2 setups. If we don't have a 1-2 setup, it's more challenging to trade. If you can trade diagonals well, great. I know many people can't because you have to be a bit more flexible, yeah, less aggressive. But I mean, if you're doing okay in diagonals, that's fine. If you make a lot of losses in diagonals, lose a lot of trades, then maybe consider which setups you're trading. That's just a general idea. Because, you know, it's all about trading what's clear. The problem with a wave 4 and a diagonal is that a wave 4 technically doesn't really have an invalidation point until the price breaks below the wave 2 low. Now that's at 1.46 cents. Yeah, I don't suggest it is a wave 4 if we break below support, because the idea is what's possible and what's likely. I don't call it a wave 4 and a diagonal anymore if we see a break below the golden ratio level, the 61.8 retracement. It doesn't make sense. It's then rather something else. But for now, yeah, I count it as 3 waves up from the June lows. The top was here. That was in December, a wave 4 pullback, and now just waiting for a little bit of evidence that we are already on the move in wave 5. Target for the wave 5 is clear. For me, it's still between 4.43 cents and 4.95. It's between the 2.382 extension and the 2.618. And yeah, it takes a little bit more action. For example, a break above the green trend line. I think I would say, you know, if we see a break of that green trend line, and currently we see a rejection there, a small one. This is this trend line here that the price respected already a few times. So if we start to see a sustained break above that trend line, I think we can say that possibly the low is indeed in this wave 4. At the moment, this is way too early, okay? We can have a look at the Fibonacci levels. Do we already have 5 waves up? So just visually, 1, 2, 3, 4, 5. I mean, maybe. I have to say, when we look at the smallest time frames, you get a lot of distortions in the microstructures. Work with Fibonacci levels is so much more important, even more important than the visual assessments. And I can tell you that from a Fibonacci level point of view, nope, this has to be the third wave, yeah, because in the third, minimum expectation 1.236 extension, and then it would be rather like that. So I've got possible 3 waves up. That's not a 5-wave structure to me, and it makes sense because this looks then like an A wave, B wave, and then 1, 2, 3, 4, 5. Oops, here. No, 1 second. That doesn't add up. This adds up. 1, 2. This would be the 3. This would be the 4 and the 5. And it would be 5 waves in wave C. So A wave, B wave, C wave, and then It's a 5-wave move, and each of the subwaves seem to have 3 waves, because you have a 1, 2 here, then an A, B, C. Anyway, that goes too far. I just want to emphasize it is a 3-wave move. The Fibonacci levels tell us very clearly it is. Now, okay, that doesn't mean it's bearish necessarily, but it means that really to get 5 waves, it needs to turn to the upside here and then get to 3.05 cents. But until I see 5 waves, I cannot confirm a low is in place, yeah? So it could easily still break down. It shouldn't be a surprise. And if we break below the last swing low at 2.64 cents, then yeah, it's likely starting to break down and will form another low and then probably touch the next support level there in the orange box at around 2.38 cents. That's my update about VeChain. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.